This video will teach beginners about support and resistance. I'll explain what it is and also show you how to draw it on your charts. I intend to put together a complete series of trading videos leading you from foundations right through to trading mastery. I spent a lot of time and suffered a lot of stress and heartache, not to mention financial loss, on my journey learning how to trade. And so the series that I put together will be exactly what I wish had been available for me. Okay, let's get started. What exactly is support and resistance? The simplest way to think about support and resistance is that they are areas where the market changed direction or has stalled repeatedly. A bullish move, so the market rising, which turns bearish, has met resistance. The opposite, so a bearish move, which turns bullish, has met support. Support and resistance areas can last for minutes, hours, days, weeks, and even years. As you study charts and learn markets, you will come to realize that markets have very long memories. However, this does not mean that support and resistance areas are never broken. In fact, they are broken regularly. When broken by a bullish move, resistance often becomes support for the market in the future. The same can be said for a bearish move. So when support is broken, it often becomes resistance for the market in the future. A last point on support and resistance is that it works on all time frames, be that 1 minute, 5 minute, 1 hour, 4 hour, daily, or weekly. It works over all time frames. It really is that simple. A lot of trading is very simple in a practical sense. Most traders fail, and estimates are as high as 90% of retail traders because of the psychological aspect of trading. I intend to touch a lot more on this in future videos. For now though, let's stick to support and resistance. Markets move in relation to the strength of the bulls and the bears. So when the bulls are in control, the market pushes higher. When the bears are in control, the market falls. There is always a battle going on between the bulls and the bears, and this is what moves the market. This is why you see markets moving like this. On this example you can see here, as the bulls push higher and the market turns, the market has met resistance. As the bears cause the market to fall, but then lose control to the bulls, the market has met support. When the market is moving sideways like this, the market is in a range. This is the most common way for the market to move. But do bear in mind that it will rarely look as neat as this, or be quite as easy to identify when you're on live charts. Another thing to note is that when the market does break resistance, it often becomes support. This market is now making higher highs and higher lows. A market moving like this, making higher highs and higher lows, is said to be in an uptrend. Moving in the opposite direction, when the market breaks support, it often becomes resistance. This market is now making lower highs and lower lows. A market moving like this, making lower highs and lower lows, is said to be in a downtrend. That is the basics of support and resistance. Now, let's jump over to some Forex charts and I'll show you it in action over different time frames and charts. Okay, so we're on the Euro US dollar Forex pair. I've got this set to the daily time frame, and what I want to do first of all is just show you the basics, explain why support and resistance is created. At the end of the video I'll show you a trick that I used when I was first starting that makes it a lot easier to draw support and resistance. But for now, let's start at the daily time frame and then we will move down. So the first part of interest here is right here, because we can see the market has dropped all the way down to this area, and then we have had a strong reaction to the upside. So this means that this area now is a potential in the future to become support. So if we just get rid of this just now, and what we can see here is, if you take your lines for marking support and resistance, first of all you need to remember that support and resistance is a zone rather than an exact location. What I like to do is I always take into consideration any tails or wicks, and then if you pull the second part of your zone upwards, so you're incorporating the wicks from the entire move, because as you can see, this move took a little while to get going. So it's bouncing, it's bouncing, it's bouncing, it's bouncing. So you want to incorporate all of this into your support and resistance zone. And now what happens is the market shoots up, and as it comes back down, all of the professional traders are now watching this zone as a potential area to get in the market. Also, people who missed this move are going to be watching the market because they want to get in and make some money. And the market drops down here, and what happens is the amateurs, what they're doing is they think this is now into a downtrend. So down here, they are still trying to sell the market. See this strong red candle here? This shows you that a lot of sellers are still trying to get into the market. So what happens? Well, basically, the professionals step in, they push the market higher. Everyone who is in a sell position and who has held on to this sell position down to here, the smart people, they close the position, take profits. And when you close a sell position, it is the same as opening a buy order. So the market pushes a little bit higher. People's stops who have started to go short at these sort of areas, their stops are sitting up here. They start to get hit. The market starts to gain momentum, pushes up, pushes up, pushes up, and then you get a strong move. If you pull the market along, you'll see it continues on its upward motion. And this is solely created because basically this move indicated that this area, this zone right here, in the future has the potential to be an area where the market will change direction, and this shows you that it's going to happen in quite a strong way, and it does. It goes up. Now another thing I want to show you here is I want to show you how the markets have very long memories. So right here, this is November the 14th, 2008. This is March the 5th, 2009 when this happened again. But if I scroll out here, now I've not actually checked this, so I don't know if there's going to be any more touches on this market, but oh yeah, here we go. So if we scroll back here, you can see that this is 2006 now, and you can see the market is still using this zone. Scroll back a little bit further, see it's using it here. So it's using it here as resistance. As it breaks through, it comes back down, and resistance now becomes support. This is 2006, 2005 again, and this shows you that the markets have very long memories. So if you had marked in this zone way back, even say in 2006, you might think, you know, all this white space here, you might think, oh, the market's never going to return there. What do I do now if the market does start falling down here, because there's nothing to see? But you scroll back, and it continues to obey this zone. And if I go into the future from this time periods, okay, so here we go. This is us up to 2010 now, and as you can see right here, we're still using this zone. You can see it's pushed up here, it's tried to break through and stuttered, and this strong candle pushes it through. As the market breaks through, it comes back down, retests the zone, pushes off, comes back down, retests the zone, and pushes off. And this happens over and over and over in not only the Forex market, but also in indices, gold, silver, whatever you want to trade. This is how the market moves. And it's basically people betting the wrong way on the market and professionals using that as momentum for them to make money, because everyone stops now who's trying to go short here. They're sitting up here, they're sitting up here, they're sitting up here, and so when the market turns, when the big money starts to push the market up, it starts taking out stops, and people start exiting positions because they can't handle the loss. That also sends the market higher. Amateurs start to jump on the market as it moves up because they don't want to miss out on the move. And it pushes higher and higher and higher. And that is essentially how support and resistance is formed at these key levels. If I drop down onto the hourly chart, this is still Euro US dollar. I just want to show you that it works on all time frames. So if we look here, you can see the market is moving up here, it's pushing down here, up here, down, up, down, and you can see it's moving in these triangles. This is how the market moves, up and down and up and down. It never just moves straight across. Sorry, get rid of that. And so what you're looking to do, again, if I delete all these, what you're looking to do is you're looking to find the points where the market makes the biggest moves. You can see this is a strong move down here, and then it bounces. So this is obviously going to be an area in the future that is going to be important. If you come across, you can see it's still using these areas here, here, here. Now take the bottom. Because you're using this section here, you have to use the bottom of the tails, which is there. And this now becomes a zone for the future. You've also got one down here, right there. Scroll across, you can see because this broke through, came back up, it's retested this zone up here, fallen away, retested down here, and then it breaks through. So if you come along into the future, come down, the market tries to break out. This would be a false break. It breaks down and then it pushes straight back into the zone. It tries to go down, fails, and pushes back up again. Well, the key is, where does it push back up to before it meets resistance? It's the other zone that we've marked. And then the market comes down, retests, comes down, tries to break out, false break, falls down. But what does it do here? When it falls away here, before it falls away, it retests this zone. This happens maybe 80% of the time. It's almost like a second chance to get into the market. So if it breaks out here like this and you miss it, it usually comes back up and retests. Market falls down. When the market's trending down the way, as I explained in the video at the start, this would be considered a downtrend. It's making lower lows, lower highs. When it's moving like this, quite often what happens, as the market drops through here, it comes back up and it wants to retest before it then falls away again. Market falls away again, you can see right here. Market comes down, market comes up, retests. It doesn't manage to make a lower low, but it has made a lower high. So you would just watch the market here. Comes back up, it can't break through these two zones, it retests. This is a strong pin bar here. If you don't understand candlestick patterns, I'd suggest you watch my other video and learn about those, because it's one of the keys to success. You can't just use support and resistance. You can't just say set a sell order here. If you do, this is exactly what this long tail is for. It's designed to take out everyone who does this. You need to use a confluence of different factors in your trading that all align together before you start entering the market. Come across here, retests, retests, retests. It just keeps doing this. Retest, here, still using it, and then finally we break away from this zone. And when you break away from the zone, what do you think you do? You look for the previous lows. Get up a touch there. Breaks through, comes back up, and retests. The market always moves like this. It always uses support and resistance for its moves. No matter, even if it's a news release and the market does something crazy like this. This probably was some sort of news release. So the market drops away, comes down, and you might think, oh, the market's lost all sense. What am I supposed to do now? But it still obeys support and resistance. It has to. This is where everyone sets their orders. This is where everyone is looking, and trading is a psychological game. It's people on the other side of computer screens that are buying and selling. So if you learn what they do and how they react, you can be a successful trader. Okay, so that's the 1 hour chart. I'm going to drop down onto the 5-minute chart on a different pair. I'm going to show you, let me get it up. I'm going to show you that it works exact same on the 5-minute, and I'll also show you a quick trick for drawing support and resistance. This is what I used to do when I first started. So, okay, this is the 5-minute Australian dollar, US dollar, and all you need to do is take the arrow function, or if you haven't got an arrow function, you can take line function. It doesn't really matter. You can draw lines. What you're doing is you're basically tracing how the market has moved, like this. Just trace the market out. There's one there. Let's do this. It takes a little bit of time, but it's a great way to learn how to draw support and resistance. Okay, if I just drag down, I'll just do it a little bit more to show you. There we go. Okay, so then what do? All you do is you take your lines, start at the top, move down with your lines. See how it's touching the triangle there? Come down. This is obviously a zone because all these triangles are very close to each other. So just come down, come down, come down, and you want to incorporate all the triangles. So there you go. All the triangles are now incorporated into this zone. Here we go. Triangles. Come down, and look over here. I just put another line here, making it a triangle. All these triangles now align, don't they? Yes. Now you want to incorporate the entire triangle, so you come up to the top. There you go. And there's another one here. I wouldn't consider this a major zone because, I mean, it's moved away from there, it's stalled there. It's not bad, but this is a lot better for me. So the market comes down. Here you go, here's more triangles. Line them all up. The bottom of these triangles. There you go. So now, and eventually you won't even need to draw these triangles, obviously, but it's a great way when you're first starting to learn. So here's your zones. And then all you do is when the market moves in the future, you're watching these zones. You see the market breaks through here, and it uses this triangle. It's a false break, pushes out, instantly returns down. This shows you that there's no strength to keep pushing the market higher. So even though you've had this strong move upwards, it instantly rejects as soon as it gets up to this level. Pushes back into the zone that we drew, tries again, fails, and then falls away. Come along. You've got here, comes into our zone, stalls out, breaks through, uses the next zone, pushes down, here, here, and you can just keep going. This zone will keep working. You might have to adjust it ever so slightly in the future, but these zones will be key. And here you go, here's our top zone is now being used. Where does it drop away from? It comes down, stalls at our zone, pushes back up, tries to retest it, pushes back up, can't break out, falls away. And that is support and resistance, basically. That's the easiest way I know how to draw it when you're first starting, is you just draw the triangles, line up the triangles, and that will help you a lot. Okay guys, if you liked this video, please like it and subscribe to Decisive Trading. I've got a lot more videos I'm going to make which will help you from complete beginner all the way through to trading expert. Thank you for watching.